Good morning and welcome back to Almus Market Mornings. With the ceasefire in place, we saw a significant rally in risk assets yesterday. Equities rallied, yields came down, and oil prices were down. But there seems to be a wind of caution, primarily because there are still reports of attacks and only very few ships passing through the Hormuz Strait. Moving on, the RBI pretty much kept put with no change in rates or stance, but highlighted the downside risks to growth due to the West Asia crisis. Good morning, JK. A mixed bag of developments. The market still seems a bit tentative on the ceasefire developments. What's your reading on this?
Good morning, Swaraj. Yes, we cannot take our eyes off what's happening in West Asia, and we of course had a very good start to the day yesterday after the 15-day ceasefire that was announced by Trump and Iran. However, the ceasefire or the truce still appears to be quite fragile, and market is reacting to it. It has not been clear from Iran's perspective that Lebanon was not part of the ceasefire, but Vice President Vance clarified that it was not. So the issue arose because Israel carried out a large wave of airstrikes across Lebanon, killing hundreds of people, while officials say the war against Lebanese armed group was launched by Israel, and Iran has reacted by not opening the Hormuz Strait, which was part of the ceasefire agreement. So there's a lot of oil carrying tankers still waiting to be let by the Iranian forces. So Iran also has said that the three clauses of the 10-point proposal were violated before negotiation to start on Friday in Pakistan, adding that in such a situation, bilateral ceasefire and negotiations were quite unreasonable. So that gave the reason, yesterday we had a massive reaction to the ceasefire agreement or ceasefire talk. However, uh, these developments gave a good reason for the markets to retrace a large part of these moves, particularly in the currency and in the oil market. We have seen dollar give up, or rather, dollar retrace some of its losses. Euro pushing towards 1.1650 from 1.1720. Dollar yen now back near 159 whereas it had traded below 158 yesterday. Oil has bounced about 7%. Stocks, of course, are off a bit, but a large part of the gains have still been retained. Then yields have also gone up. Now US is definitely pushing for the free and open trade, but Iran not losing the grip, and alarming the Gulf and the energy producers as well as consumers. It's creating once again tension, and there are skeptics who say whether the ceasefire will eventually happen or not. That is one extreme view that is happening as well. Now, adding to these uncertainties, there was also the minutes of FOMC that were published yesterday, and it was quite hawkish from the FOMC members. Vast majority noted that progress towards 2% objective could be slower than previously expected, and pointed that the risk of inflation was elevated for longer than expected, which could call for a rate increase. So that again was again a dampener for the market. So we have some sort of a reverse situation, not exactly completely reverse, but definitely a cautious market now as we open, and that is of course will also tell up on the domestic market. Of course, we domestically, as you referred to, there was RBI rate decision, of course, which kept the rates unchanged at 5.25%. But there was a growth projection for 2027 at 6.9%, well below the growth for 7.6% of 2026. Inflation has been projected at 4.6 versus 4.4% for the financial year 2027. And the RBI has been quite I mean, they one would have thought that they could adopt tightening bias, but they were actually quite neutral in their stance, and they were hinting that because of the challenges that could be there for the growth in the coming months, they would like to remain neutral, and they were focusing on maintaining a steady stance and also ensuring adequate liquidity for the markets as well. I think this market did not react much to the MPC decision because in any case, no change was expected, and market was prepared for lower growth and higher inflation. But what is market focusing on is how things proceed further from these levels. And of course, there was a lot of focus on the currency market by the RBI governor as well as in the press conference, because there were questions about how the recent regulations had impacted the rupee, and in fact helped the rupee to recover. But RBI said that they are committed to development, broadening and deepening of the markets, and as also for internationalization of the rupee. But the current measures are not going to be permanent, and these are intended to address short-term excessive speculation as well as one-sided movement of the market. So they remain committed to maintaining less volatility, or rather undue volatility to be curbed. That is what they have clearly stated. So it is a neutral policy with a focus on stability and preparedness for facing the challenges as they come across, because the situation in the global scenario remains quite uncertain. So as I said, dollar has retraced higher a bit, and we are seeing even stocks in some regions give up some gains, but markets remain hopeful that the talks could start on Friday in Pakistan for a more lasting solution to the Middle East war. And so I think that is something that we will watch very closely, and markets will be reacting quite a bit either way. And as far as the rupee is concerned, we traded below 92.50 yesterday, but again, well supported there because of buying from PSU banks. Now it does appear that long position of the banks, which was expected to be unwound before April 10th. A large part of that seems to have been absorbed by the market, both the PSU banks as well as the other importers. Yesterday, one feature was that the forward premiums came off quite a bit after the yields fell, and that made with a lower spot, importers were quite active, because the hedging cost came quite lower just compared to a week back. So that has also supported the market. Now it does look like hitting 92 for the rupee, which was looking a high probability, now looks a bit difficult in the current uncertain situation, particularly in the Gulf. However, I think any major weakness also might be, of course, stopped by RBI through their, intervention as well as measures. We will see how far the rupee can gain further in case there are further long positions in the with the banks till April 10th. That is what the market will be looking ahead to. Otherwise, I think it's a wait and watch situation for the markets. So we keep an eye on the global developments. Thank you.
Thank you, Jack. And yep, the eyes would be on the talks which start on Friday, and whether there is a lasting solution to this particular West Asia war. And moreover, today the market seem a bit more tentative because there is some confusion with respect to whether Lebanon is included in the ceasefire or not. Israel claims it's not, while Iran thinks it is, and they don't seem very happy with yesterday's strikes by Israel on Lebanon, which was quite significant. Oil has bounced by 7%. Yields have gone up as well. But broadly, equities have retained their gain. Some bit of profit taken might be there, but they have broadly retained their gain. Domestically, we saw RBI keep rates and stance unchanged. Growth projections for 27 is lower. It's at 6.9% when, as you compare to over 7% for FY26. So slightly lower growth, while inflation at 4.6%. In currency markets, we saw dollar index, it has moved back up a bit. And I think now the focus would be on the Friday peace talks. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh
Raj, I just
topic.
wanted to point out
Yeah.
that, despite all these developments, FI numbers continues to be negative. Even yesterday,
Mm.
it was a outflow from FIIs.
Mhm.
So, you know, for markets to stabilize better, at least these FI numbers seem to improve, needs to
Mhm.
be improved,
Needs to improve. Yeah.
as well as, oil price needs to sustainably fall. So long as oil price remains above 90 and FI flows are not returning,
Mhm.
the bias for the rupee is likely to be slightly on the weaker side.
Right, right. So the underlying theme has not changed.
Yes,
It's
exactly.
just due to the directive-led moves that has happened, but otherwise the
Yes,
underlying themes have.
yes, yes. Yeah.
Thanks for listening. We
Thank
will
you.
catch up tomorrow. Thank you.